Peter, really good to see you this Wednesday, especially given all the action we've seen in the gold market. Thanks for being with us.
Nice to see you, Daniela.
So, Peter, last time we spoke was before gold's turnaround on Friday. And in this morning's commentary, you were noting how the gold market you're seeing right now is not one of conviction.
Well, it hasn't demonstrated conviction yet. I'm not saying that, that's not still in the cards. We got the bounce we expected on the double bottom at 1185. Unfortunately for most investors, they didn't see it. It happened overseas in Asia on Sunday night. But there was a solid bounce at 1185. As soon as it hit that level, I was watching the market. There was buying that came in right away. Brought gold back over 1200, the first psychological level. And, it took a bit of grinding to get it through the 1212 level, which it did overnight. But again, it's very, very early in this to determine whether this is a reversal here or, a bounce. And, the bounce is coming from, the euro having dropped from approximately 135 to the dollar to 125, and then having a bounce of 150 pips on Monday. And the equity market's starting to take a bit of pressure. So, some of that capital allocation is going to move back into the metals. The market was extremely short. So I'd like to see the follow through here. And I wrote this morning that I'd like to see 1222 taken out, which will give the technical traders some encouragement that there is some momentum in this market.
Now, Peter, I'm just going to pick up on something you said. You said you're waiting to see the direction of the market. Are you referring to more physical buyers coming in? We know we have the Indian Festival of Diwali set to begin at the end of October.
About a week ago, I think I commented that I'm starting to become encouraged with some of the physical offtake that I'm seeing. One of the premises that I looked at about a week ago was an announcement by the Royal Canadian Mint that they are back on allocation on most of their silver bullion products. Prior to about a week ago, obtaining silver maple leafs and 100-ounce silver bars was no issue. Now they've got the dealers back on allocation, which indicated to me that demand was starting to pick with silver south of $17. We had the Chinese holiday, which took some physical demand off the market. They're back. So the physical market is starting, and again, I caution the word starting. I don't know how long this will last, but it's starting to pick up, and that should be price support.
Peter, also the U.S. Mint reporting that its Eagle gold coin sales in September rose to its highest level since January. Peter, are you seeing any shortage on the gold supply side here?
There wasn't that much pickup in gold. There's no issues in sourcing gold, physical bullion at these levels. But silver was certainly well bid under $17, and the physical market demonstrated that by there's really very little physical supply out there. And we're seeing some of the dealers on the retail side starting to raise their premiums. Especially on items such as the Silver Eagle, Silver Maple, and 100-ounce silver bar. The premiums have gone up about 10% over the last week.
Peter, I just want to touch on Europe now because I really like how you phrased it offline and how the situation in the Eurozone will continue to impact the U.S. dollar. So a European Central Bank official on Wednesday laid out more specifics on the recently announced ECB plan to implement quantitative easing of its monetary policy. The official also added that the present very low inflation rate in Europe is very worrisome. Peter, I believe you share this sentiment.
Yeah, I mean, if you look at the dynamics of the market, I know what the Europeans want. It's questionable whether the Americans will allow them to do it, and I say that tongue in cheek. But a euro at 127, 128 does not play into the ECB's premise. They want to generate growth in Europe. Draghi is having an issue with the Germans. The Germans are very reluctant to put a QE package on the market. They've still got memories of the 1920s hyperinflation. And so they're very resistant to a big QE package, i.e. the Fed's package of 2008. So Draghi is in a situation where he doesn't have a lot of room left to bring interest rates down. But I think it is his game plan to try to, well, we use the word, devalue the euro and get it down as much as possible. And hopefully that will then generate some economic activity from Europe as they hope to export their way out of a situation which is looking more and more deflationary every day. So the euro at the 128 level indicates to me that, I'd be looking more at a target of 120, possibly 110. And, these things don't happen overnight. They're trending. So I still see the trend over the next 6 months in favor of a stronger US dollar and not a stronger euro. Now, take all geopolitical risks off the table, assuming there's no meltdown in the financial system in the US. That implies to me that the metals are going to have some headwinds going forward over the next 6 months on a premise of a stronger dollar.
Peter, thanks so much, and I look forward to seeing you next week in studio. I know you're coming on down to help us celebrate the 5-year anniversary of Kitco News.
Cool, that'll be great.
And Peter, I also look forward to heading down to the Cayman Islands with you. I know we'll be covering the Grand Cayman Liberty Forum, where you will be a keynote presenter.
Well, I think it's an excellent event. The keynote speakers are industry leaders in the precious metals. They've and by that I mean they're not newcomers to the business. They've been around for 20, 30 years. One of the speakers, Casey, has been in this business as long as I have, since the 70s. So, I think it brings a sort of a feel to the conference of sort of a historical perspective as well as current, as well as current fundamentals. I'm going to be speaking on the psychology of the gold buyer, relative to what they looked like in 1980 to what they look like today, and be able to lay up some fundamental pros and cons on the gold price. So we're looking forward to it. It's going to be well attended, and 7 Mile Beach and the Turtle Farm is certainly on my itinerary.
And I'm going to keep you to that promise of the Turtle Farm, Peter. You promised me a visit, so we look forward to seeing you. Thanks so much.
You're welcome, Daniela.
And for those interested in the conference, you can register at the link below. In the meantime, I wish you a fantastic Wednesday.